I'd like to introduce today's presenters from MPA. MPA is a CEA service partner made up of technical experts, tax specialists, industry-leading accountants, and all-round innovation enthusiasts. It was founded in 2004 with a vision to strengthen the UK economy through innovation. They've helped over 2,000 UK businesses access over £210 million in R&D tax credits and grants to grow their businesses. And today's presenters are Samantha Wildman and Peter Corley, who have between them 20 years experience in advising businesses on how to fund their innovation and maximise their R&D and patent box potential. So I'll hand over to Samantha and Peter to let us know how we can claw some government money back, which would be nice.
Excellent. Hi there. I now need to share my screen, and it's coming up differently to what it was when there. Bear with me 1 second. Hopefully now you can see that. If Peter, you'd like to unmute yourself and tell me that you can see, because I can't see it.
I can see it, but with the notes and everything on, I think you need to.
There we are. Excellent. So we're really pleased to be here. Thank you, Joanna, for organising today's event and allowing us to be part of the work that the CEA do to support their members. We're going to talk now for about 30 minutes about R&D tax credits, and as Joanna said, there'll be questions and answers at the end. So let me introduce ourselves. I'm obviously Samantha Wildman, and I'm supported today by Peter Corley. Peter has over 12 years experience with working with engineering and manufacturing companies. He's worked with more businesses than I can most probably count to introduce them to the R&D tax credit scheme. So it'd be fair to say that he has a really, really good knowledge of the scheme and how it works best for our clients. I'm part of Peter's team. I've been supporting innovative companies now for about 8 years. Taken them on their R&D journey. But as Joanna mentioned, it's not just R&D that we do. That's a very big part of what we offer, but we also do work around patent box, grants, business consulting, specialist tax and accounting advice. So any of the services that are needed for innovative companies. When we work with businesses, we're normally there to help them with a situation they have, and it's normally that they want cash. So that could be business that may be struggling, especially in the times that we're in at the moment. You know, there's loads of issues that businesses have to deal with. Manufacturing, we quite often hear issues around productivity, lack of skilled staff. There's been the uncertainty around Brexit, around trade and export, and now that they've got the COVID-19 situation to deal with. So a lot of people have been looking at what options are out there to help finance their business, to keep them going, to secure jobs and roles for their employees. You know, so we've been helping them with CBIL, furlough, deferred payments, grants. We also work with businesses who have sort of had to maybe change what they do to cope with the situation that we've been in. We've seen a lot more collaborative workings with other businesses. People may be adapting or changing what they offer to meet some new market demands. And again, issues that they face in dealing with that. And we also work with businesses who are, I suppose, more now looking at how they grow as they come out of this. So they've maybe spent time working within the business, putting things in place for future growth. But all of these things, depending on, you know, it doesn't really matter if they're surviving or thriving. A lot of them are asking for how do they get the cash to do that. So the aim of today is to really talk about how R&D tax credits can help you with that. So firstly, the question we need to answer is, what are R&D tax credits? And I know many people on here today will be familiar with the scheme, would have heard of it or would be claiming it. But I still find when I go out and talk to people, the words R&D and the words innovation can mean so many different things to people. So we'll address that as well. But let's first of all look at the scheme. So the R&D scheme is the government's way of rewarding businesses to innovate. There's a really big, strong correlation between innovation and economic growth. That can be shown within a country's R&D GDP spend, or the percentage of what they spend on the GDP. The UK is currently at 1.7%. The EU wanted by 2020 to be at 3%. As an average, as a whole, I think they're at just over 2% now, so we're all way short of that. We want to put those figures into perspective. France are on 2.8, Germany's on 3%, US is just over 2.7. So it proves that R&D tax credits are a real big part of the UK industrial strategy for growth, and so they are very, very important. Not just for businesses, but for the economy as a whole. So let's look at the definition of R&D. HMRC will say things like R&D is the advancing of science and technology by solving complex technical uncertainties. And at that stage, most people I speak to switch off because, what does it actually mean to them? But R&D is much more simpler than that. Now, as a business, you're looking to move yourself forward, and to do that, you've got to overcome challenges. And those challenges could be, how do I reduce the unit cost by 1p per unit? How can I make something 2% lighter? How can I increase throughput by 10%? How can I meet the new regulations? How can I deal with the safety issues? How can I reduce error margins down by X%? How do I replace materials? All of these things are standard business issues that you have to solve. And it isn't as simple as, well, if I leave out that bolt, I reduce my cost by a penny and I reduce my weight. You just know it's not as simple as that. So these are parts, things that you have to solve. And the other thing to look at is, why do you win business? Are you winning business because you're cheaper? But how can you be cheaper than somebody else? Now, we're all in business to make money. So we all need we've all got costs that we've got to cover, as well as making money on top of that. So how are you making something cheaper? Or do people come to you because nobody else can do it? They don't have the skills. Where does the skills come from? Or because nobody else will take the risk of learning or working out how to solve the problem and to get the client what they want. And it's that risk that HMRC want to look at and reward you for. Now, to try and sort of put that into a bit more context, Peter, when you're out speaking to companies, what are sort of things do you experience around what is R&D?
It's like you say, Samantha, the main thing is it's people's different opinions on what R&D is. It depends on what type of industry you're dealing with. You deal with a lot of engineers, and engineers just category, it's what we do every day. This is what we do, so how can that be R&D? But one thing missing off that slide actually is it's seeking to solve technological uncertainty. A lot of people think if they don't actually achieve the result they were looking for, it's not R&D. But that whole process they're going through is claimable R&D. But what you've got to do from our point of view, MPA, we actually employ technical engineers. So we're there to help challenge your engineers, your manufacturing team, to what R&D is. So we can demonstrate to them why something's R&D and increase their understanding. Because at the end of the day, it's not our opinion, not your opinion, it's what HMRC see as R&D, because we're talking about the HMRC scheme.
Excellent. So when we look at R&D tax credits, we're looking at the costs the business has incurred in doing the R&D work. And the costs fall into two categories. So simply first is people costs. Now that can be people that you employ on PAYE. That can be people that you bring into the business, contract staff, agency staff, or work that you subcontract out to somebody else. And it can also be consumed materials that are used within the R&D process, wastage, prototyping, be software costs, the licenses be used for the designing tools, other testing tools that you may have, and then there's some cost towards utilities. So that seems quite straightforward, but I know from experience that it's not. So Peter, when you're working with companies, what sort of costs do they either miss out of their claim, or maybe they don't realise that could be claimable? And the difference between direct R&D and indirect R&D, I have a lot of people, get a bit confused about that area.
There was a lot of questions all in that one question, Samantha. Thanks.
Were you listening?
Yeah. We at MPA work for companies that are already claiming R&D through the scheme and new companies. So a lot of companies will come to us and ask us to review their claims. When we go out and see them, you really get into the detail of the costs. I would say the two main areas where there's opportunity to increase the claim will be the staff costs. Purely because people look at it, right, we've got our designers, they're doing the R&D. They forget all the associated people further down the line. There's someone running the machines, there's someone looking at waste, there's someone doing the quality control. So all these people are actually involved. There's admin time, and a lot of the time they forget to look upwards to the directors at that level. So there's a lot more people involved in the process than people would claim for. Probably the second biggest area of missed cost would be materials, consumed materials. People always sort of seem to miss out the material costs. Anything that's consumed within that process can be claimed for. We're doing a lot of work at the moment with a large cement company. They're trying to reduce the CO2 in cement. They're putting a lot of material through time, lots of different chemicals. That's a big cost. When we looked at their claim, they weren't actually claiming for it. So there's lots of different areas within. Obviously, when you're looking at your subcontractors, it's looking at, is that part of the process? Can that be claimed? How much of that can be claimed? If you've got other staff coming, are they, it's different, what they call externally provided workers, EPWs. So it looks very simple on the face of it. We just put the staff costs in, we put materials and stuff, but it's digging deeper into each section to actually find the true cost for the claim.
Now, have you answered all my questions there? Let me just check. I think did. So you mentioned failed projects earlier. So that's something, the thing about seeking to solve, not actually having to solve. Two other areas that I get asked quite a lot about. One could be where maybe I'm working for a larger company and they've asked me to either manufacture something that they've designed or help them design something. Would I be able to claim R&D on that?
Yeah, it's about commercial risk effectively. If they're paying you time and material, which you don't see many contracts like that to be fair now, no, you couldn't, because there's no risk for you. They're just basically saying, we'll keep paying you £50 an hour till you stop. Whereas if it's a set price, they've said, can you make this part for us? You're taking a risk, because if you make it, you might spend more than you quoted for. You might spend less, hopefully, and make a profit, or you might not succeed at all. So there is a risk for you doing it. You can claim for your time. It's irrelevant of how much you're charging the people you're working for. It's about your true cost internally. So you can do that. And with the testing side of things, you can actually claim for testing. It's around, are you validating your R&D? That's claimable. If you're trying to get it certified so you could sell a product, it's not claimable. So again, there's quite a fine line between the testing as to whether it'll be claimable or not. But again, that's something we would look into for you.
Excellent, thank you. So R&D has been used as a really great way of reinvesting into the business. Now, a lot of people are using it to help support cash flow. So when people are out there at the moment looking for financial assistance, then they're looking at grants, CBILS, furloughing, deferred payments. A lot of these actually put a debt onto the business. R&D tax credits are actually money into the business now because they're based upon costs that you've already incurred. So it's something that's done at the end of your financial year. If you've never claimed before, you can go back 2 financial years and claim for work that you've done in the past. So that brings cash into the business now. If you've been claiming, but you feel that you've maybe not understood HMRC's full definition and maybe not got everything that you need, you can still go back and readjust the 2 years that you've already done if you feel that you should have been claiming more or maybe not understood the scheme correctly. So again, that's a great way of getting money into the business. Also, a lot of people get much more than they expect. When you look at what R&D is, as Peter mentioned, a lot of people miss out. Certain things are like the consumed materials, indirect people involved in the cost, so it can come to a lot more. So it's a great way of getting money into the business. Now, if you're a profit-making business, it basically works out that you can get back 25% of your R&D spend off your corporation tax. If you're a loss-making business, you can still claim and you can still get cash back into the business. And depending on your loss situation, you can get up to 33% back of your R&D spend into the business. Again, that's could be over 2 years on your current year. So, and then you can keep claiming going forward. So it is a great way of getting money back into the business. And it's a really quick process because we're basing it on stuff that you've already done. A lot of companies look at this as an accounting process that they do at a certain time of year, after their year end, and most probably just before the next year is starting. But really, you can work a bit smarter with your R&D. Peter, how can people not take advantage, but how can people work with the scheme better for them at the moment when maybe they're needing a bit more cash into the business?
Yeah, with this part of it's just about the more strategic planning your claim. You know, you don't have to, if you've claimed before, you don't always have to do it at the same time. You don't have to wait 9 months for your accounts to be filed. Effectively, if you're a loss-making company or claiming under the RDEC scheme, the money is available a day after your financial year is finished. As soon as you can get your accounts prepared and obviously your tax comps, your CT 600, etc., we can file a claim and get that money for you. People just tend to wait that 9 months. That money's sitting there waiting for you to have it from HMRC, and they're paying out quite quickly, as we'll come to. So why not claim quicker? You know, like I say, if you're profit making and you've got a corporation tax bill to pay, why wait till you've paid that bill to then claim the money back? Your R&D claim should be part of that tax return, so you're not paying out that cash and waiting for it to come back. But like you say, it's just about the planning of the claim. This isn't just a finance department job. It's more of a company strategic plan, looking at your R&D claim each year and putting it in your process to actually make sure you're claiming it as soon as possible. Getting cash into the company is what people need at the moment.
Excellent, thank you. Now, I know from when I go back to do the work that I do, and I go back in and visit clients who've been claiming for a while, I really see how they grow as companies and as businesses, you know, how their R&D spend goes up and how that sort of affects both their turnover and their profit, and, you know, how excited they are about doing more R&D. So that correlation between R&D and growth is there, and it's really, really good to see. I like that. And, you know, if they spent £100,000 and they pay corporation tax, £25,000 they can save off their corporation tax, or up to £33,000 again if they're loss making. And for some businesses, it is absolutely vital. So I know here on this on today that there's businesses of many different structures. So there can be manage your own businesses, SMEs, businesses that are part of a group with different structures. And how that works can really affect how the scheme works, or how you are set up can affect how the scheme works for you. So let's look at that. Peter, talk us through eligible businesses.
It's quite simple, really. Are you a limited company? Do you have expenditure in your accounts on R&D? It's really as simple as that. It's, you know, there's lots of different variations when you're coming to who can claim for R&D. A lot of people look at it, oh, we've got a head office abroad somewhere and they already claim. Yes, they could be claiming in that country. Most countries have an R&D tax credit scheme now, so they could be claiming. But as a UK entity, as long as there's costs going through your accounts, you will be able to claim for R&D. Them costs may be where you're spending money abroad somewhere. It may be management charges within the group, but as long as we can show there for R&D, you'll have a claim under the scheme. There is two different schemes. There is the small company, SME scheme, small company scheme, and what there used to be the large company scheme that's been renamed the RDEC scheme. So as you can see on the screen, there are three things there that would fit you into the SME scheme. That's where the return can be 25 to 33%. And once you get onto the large company scheme, the RDEC scheme, the return comes out, it's around about 10% net. But if you are a small UK entity, let's say, for example, you've got 5 staff, but you're owned by a national, international company that have over 500 staff, that would make you, for the scheme, a large company and put you into the RDEC scheme. So just have to look at the full picture. Again, that's something we would assess with you to see which scheme you fit into.
Yeah, great. I mean, I worked for a client the other day. There were only 10 employees, but they had a US head office, and they were owned by that head office. That head office only had one person. They'd set it up for reasons around patents and trading out there. But their accountant had told them, because they were owned by a foreign entity, that they were unable to claim as an SME under the scheme. And they were quite a small company, so claiming for them under the RDEC scheme just wouldn't have been viable. So when I got introduced to them and then sort of tell them how much more that they could get back, you know, they were really, really pleased. They had just been given such wrong advice, and that is still so very, very common with people not understanding. There's also the thing around grants and how grants can affect your scheme claiming as well, because with a government grant, you can't claim under the SME scheme for work that's associated to that grant. You can claim under the RDEC scheme, but if you're doing other work within the business that's also in R&D and it's not being funded by government grant, you can still claim that as an SME. And again, I find a lot of people don't really understand how you can split your claim under the two schemes to suit the work that you are doing there.
Yeah, it's a very big area. We see people claiming under the wrong scheme. And I think, as you say, Sam, it's a lot of it around the grants and the ownership. And other people just not really understanding what scheme, you know, to claim in. And it does make a big difference.
Excellent. It's important to make an accurate claim, and it's important to dig down and make sure that you're looking for all eligible activity and that you fully understand the tax position of the company and the group structure. But it is also really, really important to make that as efficient as you can. Now, at MPA, we have over 12 years experience. We've done over 10,000 claims. And we continually look at how we can improve our process of doing our claims to make it as easy as possible to the client. We basically put that down into 4 simple steps, which Peter can take you through.
Thank you. So 4 simple steps, really. We would come and see you. As we said earlier, MPA is a company of mixed skill sets with regards to financial engineering. We have technical advisors that work for MPA that cover most sectors with many years experience in industry and also within the R&D scheme. So they would come to meet you, get to know you, understand what you do, because it's not just about the R&D, it's about understanding the business. They would gather the information we require to do account, to do the claim, which is predominantly spending some time with your technical team, maybe the technical lead, and then obviously there's financial documentation to extract the costs from your accounts, payroll, tax forms, etc. So that's the sort of information we would ask for. It's not a long process because we understand the process, we get to know you, we can extract the information quickly. Many years ago, when we didn't have maybe there's many technical people, you've got an accountant talking to an engineer, the process didn't always work. So when you've got engineer talking to an engineer, they understand each other, we can extract that information clearly and precisely. We will then, our technical team will then build a report for HMRC. So this is a technical report that justifies the R&D you're doing. These will come under scrutiny with HMRC, obviously, because they're paying out money. They will look at the claim to see that you're doing R&D and what's in there is actually qualifying activity. We'll make sure everything that goes in there is in there, and when we're looking and gathering the information, we'll make sure that everything's claimed that should be. We don't just stop at the obvious, you push further down the line to look at what's available. And then once the claim's gone to HMRC, obviously we wait for them to assess it and then come back with the cash for you. If there's any questions, we as a company would defend that for you. That's the difference when you're looking at claims. It's making sure the claim is defendable and being able to defend it. HMRC, as I said a few seconds ago, are scrutinising more claims. Unfortunately, people are taking advantage of the R&D tax credits. So it's making sure you're maximising your claim, but you're doing it within the boundaries of the scheme.
Excellent. How long does that process typically take?
It's about 4 to 6 weeks for it all to be done, to be filed. And once it's been filed, HMRC are really good at the moment. This time last year, they were taking a sort of 3 to 4 months to pay claims. At the moment, it's about 4 to 6 weeks. So they're pretty much on target for their payout times. So effectively, from when you start to when you get your payment from HMRC, it's about 10 to 12 weeks.
Excellent. And what sort of evidence do they need to have? Do people need to keep timesheets?
No, not really. You don't need timesheets. It's apportioning people's time. It's being able to show them what people have done. A lot of that's done through the technical reports and experience, and sort of being able to demonstrate people's daily tasks. It doesn't have to be an onerous, suddenly everyone has to clock in and out for R&D tax credits every day on what they're doing.
Excellent. So I often get told that we make it look really easy. And as Peter mentioned, that's because we use the industry experts who can go in and understand what your technical guys are doing and why they're doing it and how it all works. So it's easy for them to uncover the R&D. It's also easy for them then to translate that into a way that HMRC would understand. So again, I mean, Peter mentioned it, but try explaining to an accountant issues with a weld, or issues with some software algorithm, or why you had to work on something that was cracking under pressure, or the issues that you had with trying to mount something onto something where you couldn't change the structure. They just wouldn't understand. So obviously our guys do understand it, and most of it have done that sort of work. So to put a claim together, we just need payroll details, access to technical staff, access to your accounts, and then the ability to sit there and talk to people about what you're doing and why you're doing, and understand your business at a higher level as well, to understand where else you could also be taking or using the schemes that are available to you. So one of the things that we've had recently, Peter, is that either technical staff are no longer in place, people may have moved on or changed jobs over the years and aren't there, or typically now maybe some people are furloughed. How does that affect people being able to claim?
Yeah, it does have a small effect, obviously, because we can't necessarily get all the project detail. As long as someone's available to give us an overview of the project and the costs involved, we can work from that, and then we can go back and add the detail when people are back off furlough. Again, just remember, HMRC are quite helpful on this. They realise the situation that's going on in the world and are quite understanding of it. So again, they will work with us on that basis. But it's all about planning your claim. It's looking at it each year. If you haven't claimed before, it could be a little bit, but you've got to remember what you've done 2 years ago. In the current climate, it's hard to remember which day is which at the moment. So remembering what work you were doing 2 years ago. But once you're on that every year you're claiming, it does become easier. it helps keeping records, planning your claim each year so it's less time consuming. Throughout the year, you can sort of, right, we've done this project, that's R&D. We've got clients that will set up an R&D folder, for example, just to help jog the memory at the end of the year. So having them, when you have a technical meeting, if you have monthly technical meetings, just keeping a note of what's going on in the project each month. So it doesn't have to be a time-consuming process. So it's just making R&D claims part of the culture of the company, really, rather than, again, going back to it's something the tax team do at the end of the year or a year after the end of the year in a lot of cases.
Yeah, I mean, I know some of my clients who will use their technical analyst regularly throughout the year, maybe to ask about something that they're looking at investing a lot of money on to see if it will qualify for R&D. You know, and some of them will meet with them, especially when you're doing a lot of R&D, may meet more than once a year to start putting together some of the data gathering on the R&D activity. Because when you're working on so much, as you say, try back and remember how painful something was when you were doing it, when you've already started on something else. A lot of people forget about some of the R&D work that they do. I'm seeing it more and more now becoming part of the business culture, part of boardroom discussions. I know some of our technical analysts use the term the engineer's disease. It becomes part of their process of what they do, the way that they work, and R&D now has fitted into that process of how they work and how they like things to be done. So we work with many businesses who are both directly and indirectly involved with construction equipment sector, which we're here to talk about today. We work under NDA for all of our businesses, but we do have a few members who are happy for us to talk about some of their work and some of their experience that they've had with the R&D scheme. So Peter, do you want to start off with?
Yeah, Adrian at Cabcare, we identified that there was potential there for them to have a claim. We obviously went to meet Adrian and his team and went through. We were able to go back the 2 financial years, and they got a good claim for something they didn't think they could. You know, we've worked for many years with another member, Cab Seating. We've submitted claims for them. And again, it's just about ensuring you're claiming for everything. If you're claiming already yourselves, have another person look at it, is what we're sort of saying. There's a lot of stuff being missed on claims. It's about having that thorough process, understanding the scheme, and claiming everything that is available to you.
Yeah, and also I suppose there's that thing about claiming everything that's available to you, but claiming it all correctly as well. That's, you know, very, very important to make sure that you're getting everything there, that you're doing it in the right way, that we can prove and justify to HMRC all of those costs that have gone into the scheme.
That's a good point with the technical reports. I see a lot of technical reports that, you know, people, and it's very much of, it's a sales and marketing document in a way. They're trying to sell the product. This is what we've done. This is why it's HMRC. You know, if you relate it back to what we said right at the beginning, what was the technical advance? What was the technical uncertainty? And that's what HMRC are interested in. So again, it's getting down to that level of detail, not necessarily what the product does.
Yeah, no, absolutely. So I think this is where we're going to do Q&A in a minute, but I think we're going to look at just interested in understanding the members here and what they're doing with R&D at the moment. So I think there's a quick poll. So I'll stop sharing.
Thanks, Samantha and Peter. That was really interesting. And I hope we're going to get lots of questions. Just while I'm setting up the polling, if people can start putting their questions into the chat box. If you don't know what that chat box is, it will be either at the bottom or the top of your screen on Zoom, and it says chat. So just write your question in, and that should work. Oops. Okay, so with a bit of luck, I'm going to put a poll on the screen. There are 4 questions. You might only be able to see 3 of them to start with. So I'll share the results. I think, Peter, you were going to comment on the responses. Hopefully you can see these.
Quite an even response on the claiming, not claiming. Is what we'd expect. You think you're claiming? So again, I have the people that are claiming. You know, over half don't think they're claiming the full entitlement, which is quite interesting. Again, something we can talk to you about and have a review of what you do at the moment. Quite a 50-50 on the patents. Again, patents, you know, patent box. I've just seen there's a question come up about patent box as well, so we'll come back to that shortly, and we can sort of look through that. Do you have a government grant? Again, grant funding can. A lot of people, when it comes to the R&D tax credits, after having a government grant, which can affect the R&D claim. So again, it would be interesting to look at that. So I can't quite see the results for the questions coming up. But yeah, thank you for answering the questions. It just gives us something to look at.
Okay, thanks, Peter. I'm going to close that now and open up the question and answers. I've got a couple of questions that I thought of as you were going through the presentation. Doing a lot of work as I do with government committees, I always like to play buzzword bingo. And I was actually really pleased to hear collaborative working come up, because that certainly seems to be the flavour of the month when I'm on calls with BEIS or with Department for International Trade. They're looking more and more for companies to be working across the sector into improving products, particularly when it comes to zero carbon and efficiencies. So I think that's great if collaborative working can qualify for the tax relief. But my question really is, with the new UK CA mark coming in after January the 1st, possibly superseding the CE mark, nobody knows yet. There isn't yet the testing panel set up to actually do that. If in the event that companies had to modify their product to meet the UK CA mark, and I understand that the actual physical testing process wouldn't qualify for a grant, but would the modifications that you would have to make qualify for R&D?
As you can see, we're both nodding yes. Well, it depends what you, yeah. The simple answer is yes, it depends what you had to do. Again, the devil's in the detail. So what process did you have to go through to adjust your product, change the product to meet the new standards? But most of the time, yes, because any changes, you're obviously changing it to do something else, to work slightly differently, and that's all R&D. Obviously, if it's a quick fix and it took you an hour, then it probably wasn't R&D. So it really depends, again, with them, what you're actually doing. So what did you need to do? When it comes, again, when it comes to the testing, yeah, any changes after the R&D, it's a new project. Okay,
great, thank you. Do you want to just answer the questions on the chat, or do you want to actually talk to people? It's probably, we'll get through more if we just do it on the chat, I think.
Yeah, we could do that way. So if you're grant funding, I assume we cannot claim R&D tax credits on the development work covered by a grant. Is that correct? That's not correct. You can. Again, I'll use that phrase I just used, devil's in the detail. We'll need to look at the grant, what exactly is the grant for, but it doesn't stop you claiming for that. It may just put that part of it into the RDEC scheme rather than actually the SME scheme. There's a lot of misconceptions when it comes to grants and the R&D tax credit scheme. So again, with that one, we would need to speak to you in a bit more detail about what your grant was for, the other work you do, but no, it doesn't stop you from claiming R&D tax credits.
Right, I'll do the next one. I'm just going to pick the easy ones, if that's all right. So patent box scheme. So yeah, we've talked about patents, and it's nice to see that there is an equal split with the people here who have patents and not. Some industries are heavily patented and some just avoid them completely. there can be a commercial benefit to having a patent. So there is a scheme called Patent Box, which reduces your corporation tax rate down on profits that's associated to revenue from the patent down to 10%, minus a bit of a calculation that has to go on in between. You have to be profitable at the time to claim. If you've got a patent pending, you can opt into the scheme if you're profitable, and when the patent is granted, you can go back to when you opted into the scheme, to the maximum of 6 years, to go back and claim against any profit that's associated to it. The patent can be on a part of a product, and everything that's associated to that product could be come under Patent Box. I always use a vacuum cleaner. If you were Mr. Dyson and had a patent on an air filter, it's not just the cost of the air filter, it's the cost of the whole vacuum cleaner that can go into the scheme. Also, it can be on a process, and this is one that I come across a lot of people maybe don't understand. If you have to put something through a process which is patented, and it's quite hard to get a patented process, but I have companies that do. The process is normally a mechanical process. What comes out of that can be patented as well, and again can have the reduced corporation tax. And you can claim both R&D and Patent Box at the same time. Again, the devil's in the detail about which one you apply first to your tax to get the best savings out of it. But if you have patents and you're not claiming and you're profitable, you should be looking at it. If you've got patents pending, you should be looking at it and when the best time to opt into the scheme. If you think that you have something patentable, but you've never gone down that route because the cost of trying to defend it against maybe some of the competitors that you'd be up against would be prohibited, you can look at it as a commercial tool now. Actually, how much of your revenue is associated to that patent? So what could that patent earn you? And then we can look at how big that patent needs to be. We can keep that patent as narrow as possible to still meet the requirements of a patent, but to get all the commercial benefit out of the scheme. So patents, I think, are very interesting and is definitely worth looking at, and maybe even reconsidering if you haven't patented something before that you think you could have something in the future to look at. So Peter, I've now left you an accounting question.
I was just seeing if you had stopped. Do you need to show, it's a cost-based scheme, so any expenditure needs to be shown in your profit and loss, effectively in your accounts. So any of them bits that you could claim for, as we said, the staff costs, all that needs to be shown in your accounts. One thing you can't claim is dividends. So if you've got a smaller company where the directors take £9,000–10,000 salary and the rest is dividend, you can't claim for the dividend. You can only claim for the taxable salary. I've heard that when you change your year end, you should get more money. Is that true? Yeah, what companies are doing at the moment, you can look at, recently with what's going on, you may have been driven into a loss-making situation. So you can actually change your year end, so you can use that loss to claim through the R&D tax credits. Obviously, there's other things to consider when you do that, but it will show, again, one of the other considerations, if people then looking at your published accounts, it will show you're in a loss. But I think people are more understanding of that in these times. So again, it's something you can look at. It doesn't have to be, though, we've had 6 months where we're losing money, but we have to wait another 6 months till we can do our R&D claim. You can look at adjusting that year end. Did you want to take
I think on that, it's about proactively working. So, for us with our clients, a lot of them, we're proactively working. We understand the situations that there is. It's not that you can just go off and do it here and there. It's not right for everybody, but we've got some people who maybe have extended their year end, and some people who've brought their year end shorter to enable the cash back into the business. And it's something that we've most probably been in dialogue with them, right from the start, to understand their situation and do a bit more of that proactive work with them. All right, I haven't got my glasses on, so I can't read. I don't even know why I put my glasses. Right, how much does it cost to go through the consultancy process to the point where the claim is made? So the way that most R&D specialists work is based on a percentage of a successful claim. Now, a lot of this does really depend, again, it's in the detail about how big your claim is. If you've been claiming before, if you've got a good understanding, so we can work in different ways. To have a chat, to have an understanding, to understand if you're doing R&D, all of that we offer as a consultancy for nothing. We would then look at the potential that there is, the work that was involved, what you need as a company, and then we would look at the fees that should be charged. Typically, fees start at 20% of what you get back once it's rewarded to you, but they are very much then dependent on a sliding scale of the size of your claim on that. But if you want to have a chat, I'll be more than happy to chat personal circumstances to put something together.
It's about, with that as well, it's just making sure, as we said, for the point of partnership with MPA and CEA, is making sure that CEA members are actually claiming in the right way, and claiming the right amount. It's competitive advantage as well. If other people, if your competitors are claiming R&D tax credits and getting tens of thousands of pounds back, you should make sure that you're, if it's opportunities open, that you're doing the same thing.
So there's an add-on to the R&D and the P&L. This is an area that I work with a lot with people about capitalising R&D expenditure. Yes, you can capitalise some R&D expenditure and have it included in your R&D claim, but it has to be an intangible asset. So that would tend to be people's time, like typically software development, when you're maybe doing something as a service, software as a service, any software that you're developing, you can put down as an intangible asset, and you can still claim for the full amount on your R&D in the year that you put it into the account. Tangible assets, you can't claim R&D on them, though there is an RDA for capital allowances for R&D expenditure, but that can't go through your accounts, through your R&D claim. So I hope that's sorted that, and if Peter wants to add anything more to that one.
No, I'm fine with that. Is there any fixed parameters set by HMRC on what you can claim? It's what you pay. It's it's a cost-based scheme, so it's if you're paying your staff £50 an hour, that's what you can claim up to. You can claim that £50 an hour. You can't claim the charge rate you charge someone else. It's what you actually pay the staff. So that's what the limit is effectively.
Yeah, and also if you're working within a group and you charge out time within the group, you again can't claim at the charge rate. You have to again claim at actual cost from whoever pays it within the group, if that's in the UK or abroad.
Could we confirm? Have we got our slide with the email addresses on? Is that all right to put that up again, Joanna?
Yeah,
or we can.
Our email address is very simple. It's our name with a dot in the middle at mpa.co.uk. So I would be Samantha.Wildman, and then it's Peter.Corley.
And we'll get the slides up hopefully this afternoon on the website, the CEA website as well, and make that public so everybody can have a look. I've got another question that might be a bit simplistic. Is there a maximum amount that a company can claim, either on the SME or the larger company?
I bravely said no then, but the answer is actually yes. On the SME, currently no. The rule is due to change. On the RDEC, there's a limit to do with how much PAYE national insurance has been paid on the R&D staff. The reason HMRC brought that in because there's a lot of companies that were paying subcontractors, actually had no internal staff, so it stopped them actually claiming so much. On the SME scheme, that's due to change as well, so it will be limited again to how much employees tax and national insurance is paid. So that's the only limiter, but it's very rare that would actually be a problem.
And it's not capped at the moment on the SME scheme, so anything you've done retrospective is absolutely fine.
And does it count towards de minimis spending? or is it a separate?
I'm not an accountant. I don't know that term.
No,
So.
I couldn't answer that, unfortunately, Joanna.
No, it's the state aid. There's usually a fixed cap on state aid, which is
no. I would say no.
renegotiated.
I don't think so. Not that I've come up against it before.
No, it's like when people get grants for building a new factory or going overseas on a trade event, and you're only allowed a fixed amount over a 3-year period.
No, you can. No, there's no limit on that.
No. It's good news. Okay, I think that's all the questions now, isn't it? We've nearly used our allotted
Perfect timing.
hour. So just, again, it's been absolutely fascinating. I think I've certainly learned an awful lot, and I hope that everybody's got something to take away, and going back and looking over their accounts for the last couple of years to find out what they haven't claimed for. And hopefully your phones will be hot after today with people wanting to know how they can get what's due to them.
Thank you for the opportunity to talk to the members.
No, you're very welcome. So what's next? If you've enjoyed this one, I've spotted a typo, should say 24th of September, mitigating risk and the supply chain. As part of the COVID recovery process, the government's looking at how we can secure the supply chain, because I know a lot of our manufacturing members had to stop production, not necessarily because they couldn't get their own workforce out, but because they run out of parts coming in from overseas. So the Department for International Trade set up a task force to look at how we can ensure that, should this happen again, and please God it won't, but if we're in this position in the new year, then we're looking at ways of strengthening the supply chain and looking for alternatives. We'll be running the Power Hours every month. The October one is looking at international markets and market impact. We've got Caterpillar and off-highway research on that one. November, as we head towards the end of the transition period and the cliff that we may or may not drop off on December the 31st, that will be with one of our patrons in CEA, Malcolm Harbour, who's a former member of the European Parliament and has a very great knowledge of Brexit and all things transition. Then December, we've got hydraulic controls and machine automation with Husco. Then in the new year, we'll be looking at opportunities with HS2 and a bit more of a deep dive into digitalisation. So again, thanks very much to our speakers from MPA and to all of you for coming. I'm impressed that pretty much all of you stuck it out till the end. So that must mean that you're all learning plenty. And thank you very much, and see you again next time.